Hello, I'm Sally Burdett. Welcome to Global Business Europe. Our top stories. Sailing over troubled waters. Denmark's shipping giant Maersk beats expectations with stellar second quarter earnings. Anthropic eyes a $2 trillion valuation at its upcoming IPO, which could eclipse SpaceX as the largest listing in history. Cooler than expected producer price inflation leaves US investors hoping for an interest rate cut. And would you trust money advice from a finfluencer? We look at the rise of social media financial advisors. Now, Danish shipping giant Maersk has weathered the conflict in the Middle East and posted strong second quarter earnings. It smashed expectations with Q2 operating profit almost doubling compared to the same period last year to $1.6 billion. Revenue rose 20% to almost $16 billion. Maersk now expects to earn significantly more this year as disruption in the Middle East drives demand elsewhere. The shipping giant has raised its profit forecast by $2.5 billion. It's aiming for profits between $4.5 and $6.5 billion for 2026. Maersk says congestion at ports, though, is increasing, pushing up freight rates and boosting its profits. But the disruption has had a very different impact on rival Hapag-Lloyd. The conflict in the Middle East and the closure of the Strait of Hormuz cost the group $600 million in the second quarter. Net profit came in at $83 million. That's down from $306 million a year earlier. That's a 73% decline. The group also warned that its outlook, which it raised in July, remains subject to considerable uncertainty due to the highly volatile freight rates. The continued closure of the Strait of Hormuz would also, of course, impact the results going forward. So let's speak to an expert in this field. Tom Bartoszak-Harlow is Director of Communications at the International Chamber of Shipping. Tom, thank you so much for joining us. Has non-oil cargo shipping, Maersk in particular, actually benefited from the Gulf instability?
So I think what you're actually seeing from the results that Maersk have announced today is the importance of shipping to the global economy. 90% of everything we use, we consume, is moved by ships such as Maersk, and I think that's what you're seeing in the results today. Clearly, the closure of the Strait of Hormuz has had impact on particular elements of shipping. You were talking about another company's results there. But I do think it shows that shipping is generally quite resilient. Even when there is that geopolitical instability, we're still able to move the things around that the global economy depends on.
And I think there's been so much focus on the impact on the movement of oil because it's so critical for global economies. But the truth is very little cargo, apart from oil, is my understanding, goes through the Strait of Hormuz. Nevertheless, if we look at Hapag-Lloyd, they also don't move oil. They were hit harder than Maersk. Why?
Yeah, so I mean, they'll have their own individual reasons for that. It's not for me to speculate on those sorts of things. But as you highlight, different companies have different exposures to different situations in part of the world. The Strait of Hormuz, the attacks we've seen in the Red Sea have undoubtedly caused an impact across the global shipping community. We ran a recent survey of shipping leaders which showed that geopolitical uncertainty is their #1 concern at the moment, and that's clearly impacting results across the shipping industry, for better for some, for worse for others.
So I've got to ask, for your shipping forecast, are we smooth sailing from here, choppy waters ahead, particularly if the instability in the Gulf region continues?
So it's clearly a really uncertain time for shipping at the moment. We're seeing continued attacks in the Middle East, in the Red Sea, and that's not generating confidence in the shipping industry that it's going to be smooth sailing ahead. But it is a very resilient industry. The seafarers that work in it are resilient. They work to deliver that 90% of everything that we consume across the world. And I'm confident that the shipping industry will continue to do that, whatever challenges are put in front of it. We all hope we return to smoother sailing as soon as possible, and we see the attacks on shipping in the Red Sea, in the Strait of Hormuz, stop as soon as possible, because that's going to bring confidence back to the industry and hopefully see more positive results in the future.
And which areas or regions are you looking at in terms of where the demand is really growing?
So you're seeing that demand is growing in the major economies of the world, the US, Europe, and that's in part why some of the issues in the Middle East are so serious. Things such as the transit through the Red Sea. If you don't go through the Red Sea, you've got to go around the bottom of Africa. That's adding costs to products that are being transported to those parts of the world, and we need to see that stop as soon as possible so we can return to safer waters for everyone.
Just finally, on Maersk, can we say that this company moved quicker than perhaps other cargo shippers to capitalise on the crisis and perhaps to avoid further problems?
So I think one of the things I know Maersk have done is they were very quick to respond to looking at how they needed to move cargo in and out of the Strait of Hormuz and the region without necessarily putting it through on vessels. And I think if you look at what some of their comments they've made today around making sure that there's investment in wider logistics networks at ports, rail, roads, to ensure that cargo can move seamlessly, that's a really important point. And I think the more we see that investment across the world, the less impact we'll then have when there's these geopolitical incidents that do mean ships are put under threat and can't travel through certain parts of the world.
Thank you so much. Great chatting to you. Tom Bartoszak-Harlow is Director of Communications at the International Chamber of Shipping. Now, Chinese e-commerce giant JD.com has reported better than expected second quarter revenue. It was helped by a longer sales period for the annual 618 Shopping Festival, one of China's major online retail events. Despite that, revenue was still down almost 3% compared with the same period last year, the first quarterly decline in more than a decade. German footwear maker Birkenstock has raised its sales growth forecast after revenue for the quarter to the end of June beat expectations. Strong demand, led by the Asia-Pacific region, saw sales lift 13%. The results defy investor fears that Birkenstock's exclusive positioning and high prices could be a barrier to growth. Economic growth in the UK slowed in the second quarter of the year. The Office for National Statistics says the economy grew by 0.4% between April and June. Now that's down from 0.6% growth in the first 3 months of the year. Despite the slowdown, analysts say the UK's economy remains resilient despite the impact of the war in Iran. Now, Anthropic investors are reportedly targeting a $2 trillion IPO for the AI company. That would make it the biggest listing in history, surpassing even the record set by SpaceX earlier this year. The company, which makes Claude AI, is expecting a tenfold increase in revenue by year end. Speak now to our correspondent Mitch McCann, who joins us from New York. Hello, Mitch. So we might be making history again once Anthropic lists. This is a company that's just 5 years old.
Yeah, that's right. Good afternoon from New York, Sally. Look, it keeps going from strength to strength. This would be extraordinary. And as you mentioned, it comes only months after SpaceX won the title for the biggest IPO ever on the 12th of June. Now, Anthropic has signalled an IPO was coming when it filed the necessary paperwork at the start of June, reportedly targeting September or October to launch on the NASDAQ. Now, this $2 trillion figure comes from Financial Times reporting after speaking to a range of investors. Anthropic's current valuation is around $1 trillion. Investors say that its rising revenue could double the company's valuation very soon. Investors, according to the report, also see annualised revenue reaching between $100 billion and $120 billion by the end of 2026. Now, there are a couple of things that potential investors here may be wary of at the same time. One is the performance of SpaceX directly after its public listing. After listing at $150, its stock has been very volatile, although a short time ago it was back up to $140 today. There is also no similar publicly listed company that may provide a benchmark for the valuation, and there are also concerns around its clashes in recent months with the US government over the release of some of its most powerful models. So plenty of things to consider there for potential investors, but this is, regardless, very likely to be a massive IPO when it does take place in the next couple of months. So we'll be watching that extremely closely.
And Mitch, producer price inflation hit 4.7% in July in the United States. Does that mean the Fed might hold the interest rate where it is?
Yeah, I think the view is that is more likely. The PPI, of course, measures the prices that producers and wholesalers receive for their goods and services, and it was unchanged in July. Wall Street had forecast a 0.2% increase there, so wholesale prices are essentially flat at the moment, and that follows yesterday's CPI data where monthly prices rose by just 0.1%. The headline annual rate was 3.4%, so that's still well above the Federal Reserve's 2% target, but together, yesterday and today's reports might be an early sign that inflation is beginning to ease. Now, yesterday I also mentioned on this program that the CME FedWatch tool showed a 62% chance that the Fed will hold rates steady at its September meeting. That is now up to 65.4%, so that's increased after this report. The next hike, according to that data, will now be in December, but of course a lot can change between now and then with more reports to come out. Investors, though, are happy with this news. A short time ago, the S&P 500 and the Nasdaq were both up 0.5% off the back of that report.
Thank you so much, Mitch McCann in New York. This is Global Business Europe. Still ahead, more and more young people are turning to finfluencers for financial advice. But how much can we really trust online financial tips?
Everything is a business story.
Welcome back to Global Business Europe with me, Sally Baudet. Your headlines. Sailing over troubled waters, Denmark shipping giant Maersk beats expectations with stellar second quarter earnings. Anthropic eyes a $2 trillion valuation at its upcoming IPO, which could eclipse SpaceX as the largest listing in history. And cooler than expected producer price inflation leaves US investors hoping for an interest rate cut. Now, 6 months ago, the Trump administration implemented a strict oil blockade on Cuba in a bid to topple the government. The island nation has been crippled by severe energy and food shortages as a result. Authorities are now trying to boost economic growth through private enterprise. CGTN's Luis Chirino has more from Havana.
After a severe fuel shortage due to a U.S. oil blockade, the Cuban government rolled out a 176 reform package in June, which later allowed private companies to import and sell fuel, automobiles, and clean energy systems. The government also approved the opening of private drug stores and homes for the elderly. Local economists say the measures could yield positive results, but their implementation faces challenges due to the severe economic crisis.
I think they are appropriate measures, but they came in the worst times of the Cuban economy. No results will come in the short term due to scarce resources, energy, and fuels. However, the move is on the right track aimed at a market economy, which we economists have advocated.
Cuban government statistics show the island has 2,803 state-run companies, while the number of private businesses has gone up to 15,200 since the government stated allowing them in 2021.
Cuban authorities insist that the current measures do not aim at massive privatization of the entire economy, but at encouraging the private sector's capacities to offer goods and services and boosting joint performance of all economic agents, while major sectors like education, health, energy, and the main production means keep under state control.
Adrian Fiol is the manager of a hardware store offering renewable energy equipment like lamps, solar panels, construction materials, and several household goods. He said he has benefited from the new government measures.
I think that these transformations come in a very important time for my business because they help fast-track our operations and particularly our import capabilities.
Fiol regrets that current U.S. sanctions on main harbor facilities have discouraged shipping companies from docking in Cuban ports. This is affecting his business.
A ship bringing 2 containers of renewable energy items for my business made the download in Jamaica, fearing U.S. sanctions if they docked in Cuba. This affects all private businesses.
Cuban authorities and local entrepreneurs say the package of new measures aims to engage the emerging sector in an expanded national effort to strengthen the country's economy. Luis Chirino, CGTN, Havana.
Now to Australia, where farmers are bracing for this year's Super El Nino. Forecasts are pointing to hotter temperatures and much drier conditions, which could severely affect the sugarcane industry, which is one of the country's largest agricultural exports. Our correspondent Greg Navarro has the story.
After a recent harvest, Owen Menkins turns his attention to the equipment that he relies on.
And the pump's not working, so it keeps blowing fuses.
To keep hundreds of hectares of sugarcane growing on his far north Queensland property.
You've got this land here and you've got to make a living out of it, and that's challenging. So this cane is return cane.
Menkins is a 4th-generation grower on a sprawling farm just down the road that bears his family's name. He's well aware of the challenges and responsibilities that come with growing sugarcane in the Burdekin region, considered Australia's sugarcane capital. Australia's farmers are bracing for a possible Super El Nino and the added challenges it could bring to the world's driest inhabited continent.
Normally an El Nino is detected when the temperatures are about 1 degree, half to 1 degree above normal. The forecast this time is to be 4 degrees, up to 4 degrees above normal.
For Australia, scientists say that could mean much hotter and much drier conditions.
I would stress for certain districts and for certain producers, obviously, it's absolutely devastating. So the industry will try and normalise through these really deep weather patterns, but certain sections of the industry will feel it worse than others.
Water is a huge component in the growth of sugarcane. When it's dry, and in particular during a drought, it not only becomes more critical, but more expensive.
It's just the amount you have to use, the volume has to increase, so therefore you obviously it's going to cost you a lot more to irrigate.
Especially if drier conditions persist for several years. What makes the prospect of a Super El Nino especially concerning is the financial pressures many growers are already facing. Much of that stems from higher diesel and fertilizer prices linked to the conflict in Iran.
Literally the first 10 days of March, the conflict started, and by the end of that week we started to see input price rises. So there was no way for farmers to be able to budget and forecast, to build up storages of diesel or fertiliser, to plan ahead.
Globally, sugar prices have fallen by about 30% because of an international oversupply. At the moment, the financial equation facing cane growers across Australia is simple and discouraging. The amount of money it's taking to produce these crops is substantially less than what they're receiving once they sell them.
Yeah, a bit nervous. We need the price to sort of come up a bit, just to get us back on level pegging.
About 80% of Australia's sugar is exported overseas, making it one of the country's largest agricultural export industries. The remainder supplies Australian food and beverage manufacturers, meaning the crop plays an important role both at home and abroad. Over the past 150 years, sugar has become the economic backbone of many regional communities. From the steady streams of transport vehicles to the towering mill smokestacks that dot the tropical landscape. While sugar has long been a staple ingredient in foods around the world, its role continues to evolve.
To really being somewhere in the mix between a food and fuel security issue for the globe.
For growers like Owen Menkins, the next few months could help determine not only the size of the next harvest, but the future of family farms that have helped shape this region for generations. Greg Navarro, CGTN, Home Hill.
Now, more and more people are turning to finfluencers or financial influencers for saving or investment advice. But research suggests not all the online guidance can be trusted. Here's our correspondent Siobhan McCall with all the details. Hi, Siobhan.
Hi, Sally. Yes, finfluencers are on the rise. Let's take a look at a few examples. Before we do that, I should say, though, there's nothing to suggest that any of the influencers featured in this montage are doing anything illegal or have provided advice that people have regretted.
I'm Kira, a financially literate girlie who went from £0 invested to in just under 5 years.
Here are 3 financial tips that school probably didn't teach you. Number 1, the only way to make money is to exchange it in return for solving someone else's problems.
Take your monthly income and multiply by 300. This is how much you need to invest to replace your monthly income.
What is in my wallet as a financially responsible 24-year-old living in Manchester?
Social media is a major source of financial information for young people. For example, in the United States, close to half of Gen Z investors said they learned about investing and finance this way. Many finfluencers break down complex financial jargon into easily understandable concepts. They tell relatable stories about things like clearing credit card debt, and the advice is accessible whenever people need it. But some aren't licensed financial experts. The advice can be just what worked for them, which doesn't necessarily work for everyone. And some have hidden motives, such as selling get-rich-quick schemes. Now, a survey from British bank TSB found that 59% of respondents, so around 6 in 10 who acted on financial advice they got from social media, have since regretted it. Another bank, Barclays, found that more than 40% of people who invested based on social media advice had lost money. The UK's Financial Authority is leading an international crackdown into legal finfluencers putting consumers' money at risk. There have been several arrests and many posts taken down. And even high-profile celebrities have faced scrutiny over financial promotions. A few years back, Kim Kardashian was fined almost $1.3 million by the US Securities and Exchange Commission for touting a crypto asset on her Instagram page without disclosing that she had been paid to do so. And in the United Arab Emirates, financial influencers now need a license to create certain types of financial content on social media, part of a push to raise standards and protect investors. Well, let's get more on this. Jasmine Birtles is a personal finance expert and founder and director of Money Magpie. Jasmine, thanks for joining me. Why do you think that people are trusting internet personalities over conventionally established expert voices?
Well, as you said yourself, we're talking mostly about the youth, the younger people who've been brought up on social media. They take it, they're not really watching television, they're not reading newspapers or magazines. They're getting most of their information from their phones and in particular from social media. So it makes sense that they would trust those people that they see on a daily basis through their phones and what they say to them. And as you've pointed out, much of the information is given in a very accessible way. It's in bite-sized chunks, it's friendly. Quite often you'll have somebody who's the same age as you, doing the same sort of things as you, and they're saying, oh, I've done this and it's worked, and I've done that and it's worked. So you think, oh, well, if that person's done it, it must be good for me. So it's very easy for them to be influenced, frankly.
Are they oversimplifying what are complicated financial decisions, though?
Sometimes yes, sometimes no. I think there's a broad spectrum of influencers. It goes from the mumpreneurs or money-saving mums who do things like cash stuffing, which is a good way of running, budgeting, using cash, having envelopes, and there are some good ideas there. Through to people who say, I put my money into this, and in 6 months I doubled my money. This sort of thing, and that's ridiculous and dangerous, and obviously, well, I say obvious, it's not obvious to everyone, but as far as I'm concerned, obviously should not be followed. So I think, yes, because of the nature of social media, it is bite-sized chunks. It works for some things, particularly the simpler day-to-day budgeting sort of ideas. But when it comes to more complex things, like investing, and most investing is a bit more complex, frankly. Even your basic ISA investing and pensions, there are lots of complexities to it. You can't just say, oh, here you are, here's sort of a 2-second idea, go and do this and make money.
So the UK's Financial Conduct Authority is trying to crack down on this, and we also saw examples of what some other countries are doing. What do you think has to be done to make sure that people's money isn't being put at risk?
Well, it's a very good question, because on the one hand, it does sound sensible to do what they're doing in the UAE and actually get people to be licensed. But then there are also quite a lot of sensible people who've been doing this for years, and they might not have a qualification, but they do know what they're saying, they know what they're doing. So it would be difficult in a way to know who should be licensed, who shouldn't, unless it's just financial advisors, in which case people in this country, even older people, are like, oh, financial advisors, and I'm not sure that they would be listened to. However, it would be good for people generally to be educated into how to approach information generally. You know, I mean, what I say to people is take information from different sources, triangulate the information. This is not just financial, but political, news, health. There's information coming at us from all over the place, and just because it's in the mainstream media, for example, doesn't mean that it's true. Just because it comes from our government doesn't mean that it's true, and we learned this during COVID. So why not keep looking at social media, but do it with an open mind and do it with a critical mind and think, well, that might be true, but let's have a look at and see what other people are saying and make your own mind up. I think that's where we're at nowadays with the news generally, and certainly when it comes to money.
Yeah, one thing that is encouraging from this is the fact that young people are becoming engaged with their personal finances. Is this something that perhaps schools should be taking on and teaching people from a young age how to be responsible with this?
Oh, very much so. Gosh, yes. I mean, that was what I was thinking when I was listening to your report. I mean, if we had even basic information being given in schools, proper, sensible information, and frankly, we're all singing from the same hymn sheet. Those of us who are doing our best to teach people properly how to manage their money. There's nothing. There are very few ideas that people have that are different. We're all basically saying the same thing: spend less, save more, invest regularly. You know, this kind of thing. And if we got these basics at school, then it would be much harder for the bad actors to persuade people into the wrong areas. It really is important that we get financial education, and I'm really hoping that it's going to happen in this country soon. It's been talked about for decades, literally decades, and still it hasn't been done. But hopefully it will soon, and more people will come out of school able to function as a proper adult when it comes to their finances.
Brilliant. Thank you, Jasmine. Jasmine Birtles, personal finance expert and founder and director of Money Magpie. Thanks for those insights. And back to you, Sally.
Thanks so much, Siobhan. Such solid advice there from your guest. Your headlines again. Sailing over troubled waters, Denmark's shipping giant Maersk beats expectations with stellar second quarter earnings. Anthropic eyes a $2 trillion valuation at its upcoming IPO, which could eclipse SpaceX as the largest listing in history. And cooler than expected producer price inflation leaves US investors hoping for an interest rate cut. And that's it for Global Business Europe. Thanks for watching. Up next is Africa Live. We'll see you again tomorrow, same time, same place. From all of us here in London, goodbye.